Yo, what's going on, guys? It's Gray here. Welcome back to another video. And in today's video, I want to talk about VOO versus VXUS. Which ETF should you be buying? I own both. So at the end of the day, any type of investing that you're doing into ETFs or stock market, I think they should yield something if you're within the United States stock market over a long enough period of time, I should say. But what we're investing in is important. And so I kind of want to break down what VOO is, what VXUS is, kind of why I picked it, why own either one, can you buy both, and things like that. So let's go ahead and jump right into that in today's video. First off, what is VOO? So VOO is an ETF, there is an index fund version, but a VOO is an ETF put on by Vanguard. It's supposed to track, kind of copy the S&P 500, which if you don't know what that is, if you're new to investing, the S&P 500 is of the 500 largest cap stocks, meaning the biggest Fortune 500 companies in America. It takes them and it buys a little piece of each of them. And so you don't have to go and you don't have to individually buy that. That's kind of what an ETF is in general. It's just a basket that holds various different stocks in various different sectors, or sometimes just one sector. But in this specific instance, VOO is a copycat version of the S&P 500. Then I want to talk about what is VXUS. So Vanguard Total International Stock Fund. It is non-U.S. stocks, and so it is the international version of all these different, you have the Indian markets, you have the European markets, you have all these different areas. But what that does is allows us to give us the option so that we can be a part of the international economy. So I really quick want to touch on something called home country bias. So there is a home country bias, which means you are more likely to invest in the country where you live. For us, it's the New York Stock Exchange, because that's just where I invest. I invest in America majority of the time. There is a thing to be said that America will not always be the leader in necessarily growth year over year. And so for me, I want to diversify. And part of diversification is being in international stocks, cryptocurrencies, cash, bonds, gold, whatever it might be. Not gold. I want to talk about why own VOO and why own VXUS. So why own VOO? It gives you exposure to the top 500 US companies like Nvidia, Microsoft, Apple, Netflix, all these really big companies. And overall, America does pretty well when it comes to our GDP growth. As an investor, as somebody who wants to see my money grow, I specifically can see my money growing the most when I'm in the biggest company. Because I'm buying into so many of the biggest companies in the world with some of the biggest growth, it can be very beneficial to me as an investor. For me this past year, I've seen tremendous growth in my VOO sector because it's been performing fantastically. Then you have strong historical returns and sustainability. So the S&P 500 is very old. The S&P 500 is over 50 years old, as well as the stock market. I mean, it goes back over almost 100 years, but the S&P 500 specifically has had tremendous growth over the past years. Part of my issue right now is liquidity. If I'm looking to retire early, I'm going to either have to take penalties for taking out contributions early, or I'm going to have to wait and just sit on cash and hope I can make it. And so for me personally, I really appreciate the fact that taxable brokerages accounts where I can buy ETFs give me the option to where if I want to retire at 45 or 50, I have that option because I have liquidity. I still have money in the market, it's still growing, but for me, I'm not faced with the impending version of I don't have cash, but I don't want to keep working. That's why I own VOO. Why should you own it? You should own it because it gives you a little piece of the pie of some of the biggest companies, not only in America, but also in the world. Some of the successful companies in the world are here in America, and quite frankly, they make a lot of money, and their stock prices have doubled, tripled, quadrupled, just skyrocketed. And the S&P 500 is a good amalgamation of all of them. If you want to be in the pinnacle of investing, putting money in the S&P 500 is, I can't say a guaranteed way because I'm just some guy on the internet. I'm not a fiduciary or anything. But I will say, putting money in the S&P 500, if you don't do anything else, is one of the most intelligent things, in my opinion, as just a guy on the internet who likes to talk about investing. I think it is very intelligent because you're putting money and you're betting on America succeeding, and for hundreds of years, we have. And why own VXUS? And so VXUS, as I said, is the opposite. It's not America. It's everything but America. It helps diversify your portfolio internationally. And so there can be times where international funds actually outperform the United States. It doesn't happen very often. It usually doesn't happen for very long, but there are times where it does perform. And so it will perform less. And so as I mentioned in the VOO, I don't know if I said it, but in VOO, it typically returns about 7 to 10% because that's what the S&P 500 yields is, about 7 to 10%. But when we're talking VXUS typically averages between 3 and 7%. So a little bit on the lower side. It's still giving you a return. It's still beating inflation. But specifically, it's going to be a little bit on the lighter side because the international markets typically don't perform as well as the United States. This includes developed and also emerging markets outside of the United States of America. And so this helps reduce the risk because when you're outside of the United States, if the United States is not performing well, but the rest of the world might be, it gives you this opportunity to actually kind of hedge against that performance, and it helps reduce risk by not putting all of your eggs in this metaphorical basket that is the United States. And so, can you own both? Absolutely. I own both. I own both of them because the U.S. market is strong and it adds diversification. And so, for me, I own both. I own them in a different split. I typically do about 80-20, 80 in U.S. stocks and 20 in international, because I don't want to own too much in one sector. And the S&P 500 is broken up into so many different sectors. There's, I believe, 11. And so, it allows us to have good diversification as a portfolio, and I might adjust this as time goes on and I have bigger numbers, because for right now, quite frankly, I don't own that much in the grand scheme of my investing journey. I think it's less than 3% of my net worth, but I'm going to be continuing to build this up because, as I said, liquidity is the problem. And so for you, I want to talk about you as the investor. What is the best split? A common approach is 70-30, and for moderate international exposure, or 60-40 if you're looking for more international diversification. As I said, I'm more 80-20 on. I'll probably start leaning towards that 75-25 just because I do like that diversification and that kind of hedge and guarantee. But for me, it kind of just depends on your risk tolerance. For you as an investor, what are you looking to do? For me, I'm younger. I want that heavy gain that is focusing on the United States as a whole because I have time to kind of readjust my risk allocation as I get older. And so for me, some final thoughts: buy both ETFs if you're going to invest, if you're at that point in your investment journey and you feel it's the right decision for you. Both ETFs complement each other well the way that they work together, and investing consistently over time will always be trying to time the markets. And so for me, what I recommend when you're investing in your Roth IRA or 401k or whatever you might be in, for me, I use Vanguard. If I'm in my Vanguard account, the moment I add some money into my Roth IRA, I like to throw, $35, $50, $100 here and there over the month to average out to be a few $100s a month that I'm throwing in these accounts. Because of my youth, part of that gives me an advantage because I can both build and max out my Roth IRA and at the same time be building liquidity within these taxable brokerages to give me options in 5 to 10 to 15 close to retirement age years where I actually have things I can pull from. I pay the tax on it, but it's just made tremendous gains, and I can just live off those gains without being penalized for taking money out early before retirement. It just kind of gives you some options. And so build a portfolio that fits your personal goals. For me, this fits within my goal, but for you, I want you to make as best decision as you can, and most importantly, start today. Start investing, at least start learning about this stuff. It is very important that you build a portfolio so you can build a better, wealthier tomorrow. Anyway, guys, thank you so much for watching today's video. If you have enjoyed, drop a like, comment down below what I should talk about next, and I'll see you all in the next one. Adios.